the UK banking market has undergone huge change. It was the first one in Europe to really undergo such change with the introduction, for instance, of Egg, which was one of the first internet platforms in Europe. Very soon followed by Polish internet banks, which gained a lot of momentum. And we will be talking about those changes and how those changes have impacted the consumers and what we can await for the future. So perhaps first of all, I would like to present our panel. So Paul, do you want to?
Yeah. Shall I go first? Afternoon, everybody. My name is Paul Clark. I'm the CTO of Tandem Bank. So Tandem Bank is one of the new breed of challenger banks in the UK that was set up after the FSA made the requirements for capital funding for new banks slightly easier back in about 2014. We've got our banking license in 2015. We've had a few issues since then, but let's not go into that. And we'll be launching to the public in the coming months.
Great. Justin?
So Justin Hannemann, I work for a slightly older challenger bank, Santander, in the UK. Anyway, so I work within a department called Customer and Innovation. So a lot of our work is, associated with new products, new services, very much through partnering and, learning from people like Paul, actually. Yeah.
Great. Filip?
Good morning. My name is Filip Jakubowski. I'm CTO of Elut. It's a financial service challenger bank platform. We don't have our own license, but we offer a current account and financial service under white label license to young people, millennials, just trying to build communication and channels that works for them.
Great. Wojciech?
Hi everyone, my name is Wojciech Chmielewski. I'm a managing partner in a newly established venture capital fund in Poland. It's called mAccelerator. It's mostly funded by mBank, but this is not a typical corporate venture capital. I've invested my own money and my partner invested his own money in it. We don't want to lose money, we don't want to burn it. We're looking at technology companies that can make a difference. Our investment mandate is global, so we're not only looking at Polish companies. I think predominantly we'll be looking across the globe. But it's good to see that most of the startups that we see here that have a Polish angle, they're mostly present outside of Poland, which is something that confines startups very often. We feel that with 38 million people and some pretty good tech guys, along with a vibrant financial sector, we can sort of be very good, successful companies starting the business in Poland, but I don't think this is the case. There's a lot to do beyond Poland, and we'll be very eagerly looking at things that sort of evolve beyond our home market.
Great. And I am Jakub Molski. I work for Aldrich EDC, an investment fund investing in financial assets and financial technologies. We buy companies, grow them. Our latest acquisition is Tuxedo Money Solutions, a prepaid card business with 1.7 million customers. And we're trying to create a pan-European prepaid card business. So far so good. Paul, maybe we will start with you, and if you could tell us from your perspective the very brief history of UK internet banking.
Yeah, sure. You mentioned Egg slightly earlier, which was about 2000 or something, the Egg launch. But actually, online banking in the UK goes back even further than that. For those who remember Teletext and Prestel back in about 1983, you had the first online banking experience, which was really to replicate what you could do by going into a branch. At that point, obviously, the only way you could actually do your banking was to go into a branch. Not much really kind of changed until we got to the beginning of the first internet, the internet first came around. I was going to say the first internet bubble. And then a lot of the banks began to recognize that they could move a lot of their advertising online. And that's kind of what they did, if you remember the old kind of Web 1.0 model, which was just do the kind of brochure you've always done, but do it online. And then they realized that actually, no, you could actually begin to lower your costs by allowing your customers to interact online and transact with you. But again, opportunity wasn't really taken. All they did was took the existing model that they had in the branches, and then move that online. It's great for kind of cost cutting, but it's not really doing very much different. Banking 1.0, if you like we had Web 1.0. Not much really changed in the marketplace. We had Egg that came along, first internet bank. That was great. But again, it was more of the same. It was just really kind of transacting. They did have some kind of PFM kind of functionality, but it wasn't really well adopted or particularly well understood. First Direct and people like that. But the point is, it was all kind of web banking 1.0. And then really what happened is, as I mentioned, back in 2014, when the FSA decided that there needed to be more competition amongst the retail banking in the UK, and they lowered the regulatory requirements, people began to realise that it wasn't just about transacting online. Anybody could do that. It hadn't just moving money between accounts wasn't really a differentiator, and people wanted a lot more. And now what we're beginning to see is the beginning of kind of the new banking experience, which, having a look at mBank's app, which I've seen, Poland are probably a little bit ahead of the game there. What people really want is the banks to help them, rather than being stores of value where they can move money between accounts and pay people. They want people to be able to, people want their banks to actually help them manage their money. Banks are meant to be experts in money. And what we're seeing is that increasing more and more. That's certainly something we're beginning to do at Tandem, which is to kind of not look at a bank as a number of products that we push towards people, but look at a bank as a way to help people manage their money better and provide them with products that they need at the right time, at the right price at the right point. And then when you roll forward very slightly, to look to the future, we all know about PSD2 coming up, and PSD2 really kind of shakes up the playing field even more, getting through to people's bank account information, not just being able to pull back the kind of read-only versions of the transaction histories, but actually be able to initiate payments between people. Suddenly is a complete and utter game changer. Banks become stores of money. So we've seen it go all the way from the kind of Prestel, online, on your TV banking. We've seen the kind of slump into people going into branches. We've seen all the stuff that you'd expect, the kind of normal transaction, move online. But now we're looking at the next wave, which is how do you actually help people with their money rather than just trying to push products towards people.
Excellent,
so we've come a long way.
And so have we in Poland, and we have started slightly later, but the evolution was much more accelerated due to the lack of legacy systems. Wojtek, maybe you would like to describe the Polish route.
Yeah, I agree with you. We had an easier start. I know mBank very well, so I can speak to that example. I think 2001 was when we launched the pure internet bank. And it was back at a time when broadband penetration in Poland was 2%. And yet people were sort of courageous enough to give mBank a shot. I think the only reason why it has worked out for mBank and a few other players was that the market was very, very underpenetrated. So if something started in the UK at a similar time, everybody had a bank account and reasonable transaction track record, some stickiness to their existing bank. Whereas in Poland, we at the time benefited a lot from very still positive demographics. So there were around 500,000 people joining the banking market, young people with no money. That's a different topic. But 500,000 people whom you could onboard onto pretty modern operations and convince that you don't need a branch to do banking. That if there is a good internet. Back then, not an app, but if there's a good internet interface, you can really do most of your stuff, except mortgages and some more advanced investment products online without going to the branch. But I think that was the key reason that helped Polish banks. It's not that Poland had any special ingredient that helped it become more innovative. It was simply a blue ocean, an opportunity to exploit, and you could now still see that most of the most successful banks in Poland, if you were to measure them by their profitability, are still those that are somewhere in the middle of the pack. Yeah, the banks that have been pure play innovators are somewhat second tier or third tier institutions. So I think it's a warning to anybody thinking that you can really achieve success if you are to do pure banking or the sort of banking that is mostly in the regulated space. That it can be done with disregard for sort of the traditional balance sheet business. I think right now Poland has lost a bit of its edge in terms of retail banking. We've been ahead of the pack, and I think mBank, Ali, or Idea, guys like that were put in front of the global crowds. A lot of the stuff that we have come up with were copied very well, and implemented on very large markets. And I think, being confined to a single yet large market sort of puts a certain limit on what we can do as innovative banks. I think that when it comes to traditional banks in Poland, I think the sort of boundary has blurred between traditional banks and internet banks. You look at the service of the top 10, top 15 banks in Poland, and basically, yes, you have user experience differences, but in terms of what can be done online, what can be done over the internet, that's pretty much been caught up by the other players, and the playing field is almost even right now.
So it really shows that you need to run very fast in order to catch up with the
yeah, and not to be complacent. Yeah, and not to be complacent. I think we became sort of victims of very aggressive PR in Poland, that we have the best banks, the most innovative banks, and I think we do have some really good banks with great solutions. You mentioned our mobile banking app. It's really great, but this is not rocket science. Like, people will catch up in half a year's time or a year's time. So I think our advantage has been eradicated.
That's very interesting. And a company that is used to running and being very innovative is Loot. And Filip, what other differences do you see between those markets, or how can traditional companies catch up?
There are multiple differences between those markets, and I think it's important to understand the place that UK played in the world. So this is a capital of banking in general, like for many years. So the focus was in different place from my perspective, as well on managing big assets, investment banking, and all those big banks were seeing that we're following the money. So they're putting the focus and their assets and their people to investment products. And there was growing space and need for retail banking just to improve user experience. And I think that all those people seeing the better access to build something comparable around services. So just started applying for licenses, or as Loot, to use white label license to build product. And I would agree here, with a good team, have 6 to 12 months, you can build amazing product, amazing user experience, and then start addressing the problems on the market. So I think still the big difference, if we'll talk about banks and challenger banks, is about culture. The big institutions that have legacy systems, that they have different products, they have spread focus, and the challengers are going all or nothing. That they will do everything to get their product right. They will try to iterate as fast as possible, and that's what makes them more competitive to big institutions. Regarding the startup scene in challenger in Fintech in general between Poland and UK. So there are different strategies. So in UK, because of the regulations, it's more easy to set up new company, to gather to get the money and build an exciting product for retail banking or SMEs. There are more and more products coming, and with PSD2, I think there will be much much more exciting scene growing. In Poland, it's much more difficult at the moment to get the funding, to get the new brand and trust. But we have multiple banks there, and we have very competitive multiple banks that are already on the market. And that's why the banks are being innovative rather than the startups in a fintech scene. It's changing slowly, and it's changing in UK. So we see that the bank, especially pushed by a PSD2, are getting on the stage. They're building their accelerators. They work with the startups, so IBS, I guess Santander, and many other big banks, trying to be competitive. As I was a little bit in touch with them, I know that there will be changes in their products pretty soon as well.
That's very interesting. Justin, the next years of the banking revolution, what will they bring in? A bit in line with what the guys are saying, will they bring what kind of evolution, or who will win this fight, and what is Santander doing to win this?
So I think certainly, as usual, the business that's closest to the customer will win. The question is who's your customer? I think banking in the UK, and I think it's the same across many other markets, are they've served a very broad target audience for a very long time. Full stack. And I think with the regulations that are happening, with the attention of bringing in new entrants, with competition increasing, I think, banks, not just banks, but potentially other service providers are going to have to probably think a little bit more seriously regarding where they want to play. And so as the market opens up, competitive advantages will play out in different ways, coming from back office in the storage of money, in the middle in terms of the distribution of it, or owning the customer relationship, in terms of the point under the thumb or in front of the screen. So I think there will be a reshuffle. If I look up at some of the questions that are being asked, around development methods that banks are using to stay relevant, I think if it's loot or other examples of banks that are more flexible in understanding and recognizing the fact that they need to change in order to be able to compete in a new regulatory environment, and an environment where everything's cloud-based, where there's a stronger emphasis on user experience, then I think they're probably the banks that are more likely to be able to win. But I think certainly, and we were talking just before this session around some of the biggest threats, which, everything aside in terms of all the things that we're used to changing around technology or regulation or customer preference, it's the individuals, it's the culture, it's the sort of people that you have working with you, advising you, not just saying yes all the time, but actually challenging you and thinking a little bit differently around what the customer problem is, and then redefining the ways in which you can solve that, not based on your own internal view, but potentially what's going out in the outside world from the perspective of the customer, I think will probably make the difference between some banks and others.
And just from the perspective of which technologies will really change our world, is it AI in banking? Is it blockchain? Is it instant payments? What do you think would really make a difference for a customer?
Yes, I think certainly, I'm not sure if the room is familiar with the Payment Service Directive 2, and certainly the movement for regulators to be able to open and expose data, and legislate against that, and also, through data protection, make sure that you're only releasing it with their permission. I think from a customer perspective, they can only benefit because potentially there's a lot more downward pressure on price, so there should be better and more varied access. Of course, the other side of the coin associated with money is the risk of fraud, and the potential for, hackers, others, to get access to private information, money, and move it around on your behalf without your consent is the biggest danger. And I think, that potentially is a threat, but if you can get that balance right in terms of convenience and access and value in the customer's mind, then potentially you probably have their loyalty.
So it seems like the approach to the customer is more important than just purely the technology driving it.
Exactly. I mean, I think, there's lots of headlines at the moment regarding, artificial intelligence and virtual reality or mixed reality and augmented and things like that. Certainly machine learning is a buzzword, gets thrown around a lot, but really this idea of predictive scoring or regression testing and putting that into neural networks is not new. We're starting to see applications of it, which are interesting finally. But I don't think, like most, I can say this because I work in innovation, it doesn't happen overnight. When it does, we're taken by surprise how fast it happened. But looking into it, it happens very slowly.
So,
So it's these things in combination. But certainly from our perspective, we don't see many customers with blockchain issues. Isn't to say that we're not focused on it. So we do have a dedicated team on it. But we don't spend all of our time just focusing on that by itself yet.
you also have a much bigger customer base and a much broader customer base. So the things you have to keep up with the technological development with your customers, while the likes of Loot, for instance, have chosen a particular segment that is very tech aware. So what's your perspective on the next couple of years and the evolution?
I think next couple of years will be very exciting. There is a concept of this fintech bubble in London. So the startups like mine or Tandem can be, for example, overpriced or like just too expensive. And I think they have their own value. But the PSD2 will change a lot. So the biggest risk is that banks will lose relationships. So imagine that I can, for example, manage my Santander or mBank account inside of my Loot. So what they get from it, like I can make payments, I can display account status, and I can offer different products that will be offered from even like through API, through completely different product providers. So I think that the banks are working at the moment also to going up, to open up their interfaces, not only to with the PSD that they have to do, they opening up for external product providers. So I think there's also a great opportunity to just build the products that will be applied with the brands of different banks and challengers. Definitely, there will be a lot of changes very dynamically and I think there will be growing amount of because the biggest change, why it's so disruptive, is because now the banks can be nice, they can be funny, they can be a part of your daily life. So not maybe less Facebook. The apps in general, the most apps in general that manage your finance had a problem because they don't building this behavior loop. So if you will do something, you'll be excited for one day, second day, and it will just fade away. If you build a very nice, very sexy a banking app, it can interact whenever you make transaction. It can interact whenever you will travel to a different country. So you can build this really exciting and engaging experience, and that's why the people can be excited about their banks. But then you have a lot of those financial products like loans, and I think there's still a lot of space for innovation to make this also attractive to get your scoring evaluated before you will apply. So this will make your decision. You can get this loan or you don't have to get this.
Yeah, that's interesting. Wojciech, so in order to keep up with this pace of change, the regulator needs to also change. How do you think the Polish regulator keeps up with the global fintech evolution?
I think Poland's regulator's number one main mandate is to sort of safekeep the integrity of the Polish financial sector. This is how they treat it. I think it's much less on their agenda to sort of sponsor, support initiatives that are sort of quasi-banking, that replace certain credit assessments that are done in-house by the bank by, say, social lending or activities that would at all resemble banking but would not have anything to do with regulated banking. They're afraid of this. I don't think it will happen soon. I think they have now a very strong emphasis on keeping the banks safe and sound. I wanted to refer to your point on the bubble in London fintech, if you will. I'm not afraid of this as long as institutions like yourself do not resemble banks too much, because what I see right now in Poland, guys like mBank, Alior, or Idea had this sort of twist to them that made them different to the rest of the market, that they had a valuation premium. There is no valuation premium at all with them right now. Everybody converged into a sort of similar pack of banks, with some being more innovative, some being less innovative. And I think, you know, the regulator, knowing them for quite a few years, they will take time to sort of adjust to the new realities, and will not make it too easy for Polish fintechs to operate. So advice to anyone, think about other geographies when you want to start a sort of fintech company that is to touch on the regulated segment of the market. If you have something smart that bypasses the regulations, Poland could be, you know, a place to start. If you want to, you know, be close to banking, if you want to sort of replace some of the functions, better look elsewhere. Although if you succeed here, you will have sort of gone through a very difficult path that prepares you probably to conquer easier markets.
Paul, from the UK regulator is known for being quite cooperative and fintech friendly. What's your opinion on what the last couple of years have brought, and especially after 2014?
So yeah, I mean, you're right. The regulators in the UK are very keen to see a fintech and banking market, kind of challenger banking market that thrives. And I think there's really good reasons for that. You only need to look back to kind of 2008 and what happened there to see what happens when you have an over-reliance on too many financial institutions. And so whilst, you know, the regulator is very strong and very powerful, which is a good thing, you know, we're dealing with people's money here, you would expect that. They're also very understanding. So you can approach them, you can have conversations with them. Yes, there is a rule book that needs to be followed. But they are still open to having those conversations. I think the essential fact is that they want the challenger market and the fintech market to succeed for a number of reasons, not only because it creates a richer ecosystem for the customers and provides better value for those customers, it provides protection against a single failure and the kind of market disruption that you bring, but it also keeps London and England where they would like it to be, which is, you know, a banking capital, and an innovative banking capital doing innovative things that people look at. And so the regulator for us has been really good. And I think the changes that were made about lowering the capital requirements to start a bank have been really successful. You only need to look at the number of challenges coming through. And the fact that as yet none of them have kind of hit the rocks or have been closed down, I think is testament to the kind of ongoing conversation you can have with the regulator, even when, you know, you know what it's like in a startup world. You can't guarantee success, and you want a regulator that will be there with you for the ups and the downs. And I think we're quite fortunate in this country that we have that.
Justin, the regulator is very startup friendly. How do you view it from a perspective of a challenger? Of a traditional bank? You used to have very high barriers of entry. Now suddenly they're almost non-existent.
And we're coming for you.
Yes, no, it's, I mean, I like to pride ourselves actually as probably the most active engagement with the regulator that is proactive and not necessarily responding to regulatory requirements, which I think if the FCA were in the room right now, they'd say, disappointingly, it's only the startups and the fintechs that are coming to them. It's not the other way around. And so we're working extremely closely together to understand how we can evolve and change and flex, you know, in the same way that we're seeing new entrants. But I think, you know, it's fair to say, and it'd be wrong for them to take a one-size-fits-all model, which is more or less how it has been for many, literally hundreds of years. You know, so that needs to change. And, you know, obviously we would love to be operating somewhere in between, you know, but of course, you know, with that, you know, we have 14 million active customers, you know, massive balance sheet. So, you know, there's consideration regarding making sure that that is safe and secure, that is very real. But at the same time, you know, using the challenges that the startups and the fintechs and, you know, likes of Loot and Tandem, you know, Adam Starling are doing and pressing forward for customer benefit in terms of user experience, transparency of costs, are all the things that we are also trying to push for. You know, so we're looking for support to be able to change and move at speed from the regulator to be able to move forward with their blessing, because quite usually the model is ask for permission and then move forward, as opposed to forgiveness or moving forward into innovative new territories without your competitors moving before you is the culture. But it's great to have obviously a nice healthy set of competitors coming up to be able to drive that and to push that. So we like to come in in combination with them. So it's quite exciting.
And Justin, there's an interesting question from the floor. As a global organization, how do you treat regulation in terms of innovation? So is innovation driving regulation, or the other way around in a way?
Yeah, it's a great question, because I think from the outside in, a lot of people get excited about rolling out global innovation, or rolling local innovation out globally, which I think even from the context of the EU there's significant differences between markets to make it very challenging and difficult. And I think Wojciech's already talked about this idea of the fact that Poland is quite a challenging customer when it comes to getting approvals, potentially more so than the UK. So there are significant differences between each market. But I'd say there's learnings regarding principles of, I keep on going back to the customer, but simple user experience, probably the sorts of things that mBank did really well at in 2001, which, I agree that there's no long-term differentiation in user experience because it can be replicated relatively quickly. So what else is it that you need to change and reinvent to stay relevant? I think there's benefit in learning from other markets, which is why, there's 22 markets for Santander, and we look across every single one of them for learnings to be able to take tips and tricks into the UK market, because I think everyone will be horrified to learn that there is probably someone out there doing a much better job on a situation or an opportunity than you are right now. So you have to keep your eyes open.
There's another good question from the floor, which is about instant payments and the traditional banking market. Can the legacy systems survive those new technological developments? And I would like to, for this question, I would like it to be answered. Perhaps we were basically running out of time a bit. And if I'll give you a minute each. Can you explain, or can you give us your opinion on whether the traditional banks can weather the storm, and taking this question into account as well? Then.
Yep. So in less than a minute, the headlines are: if they don't do anything, no. Then because legacy is expensive and it's slow, so when you're nimble and quick, you can move forward with much better value. And will they survive? I think yes, if they take a more open-minded approach to their architecture and also their ways of working, around agile, lean DevOps teams and microservices as opposed to web services.
Yeah. Paul, what do you think?
I think legacy systems is definitely an issue for the large incumbents, but I think equally toxic for them is legacy culture. My background is not traditional banking. My background is video on demand and media and broadcasting, where I came from a highly agile, very iterative place. I actually ended up at HSBC to try and help them push their digital forward. Stayed there for 6 months because it wasn't the problem with the systems. We could have sorted that out. Technology changes all the time. You can solve that. But when everything is put in your path to stop you changing it, then the pace of change slows down dramatically. And really, for these big incumbents, unless they really start to think about their culture and their legacy ways of working, I think that is more of a threat to them almost than their legacy technology.
Wojciech, what do you think?
There's definitely less legacy in the Polish banking sector. And when it comes to the specific question on instant payments, I think Polish banks are not being challenged by this. They are actually embracing it. Pretty much right now you can have instant payments over the traditional settlement via one of the legacy institutions in Poland, KIR. But also Polish banks have sort of gone together in a rare show of unity. We have created a sort of payment alliance called BLIK, which is developing quite well, and instant payments are sort of increasingly going to be a feature of the BLIK system. So I think this is one of the places, maybe I'm being naive, where challenges should sort of steer away from challenging Polish banks. This is where I think we can do a good job, but I can be surprised and talk to you guys. Maybe you have something that will totally change my view. I think Polish banks, to sort of expand on this question, should simply stop being complacent about other things, stop thinking about themselves as being the most innovative ones, and focus on the customer, focus on some customer empathy, and withdraw from product pushing, and not count on the regulator to sort of make life easier for them. They're very proud of themselves being tough on the banks, and I think it will remain like this for quite a while.
Perfect. Filip?
So from my perspective, I would say they have a great opportunity to survive. And you gave one example when the conglomerate of the banks in Poland just worked together, build a platform, Blik, which is pretty cool. If you haven't tried it, try to read. You can get the money of ATM without a card. It's really cool. And I think it was last week when it was announced, the banks in States, also conglomerate of the biggest banks, had set up a faster payment. I'd never been in States, but I heard the payments there was one of the worst, just taking ages, very expensive. And Apple Pay, maybe as one provider, just introduced a few days ago also the instant payment via Messenger. So they have to, the big banks have to catch up and build the new systems. But I agree with the poll. The culture is a biggest differentiator, making a decision that will come across legacy systems, legacy regulations, multiple countries, and someone have to take responsibility. Those decisions can take months. Hopefully, being a little bit visionary, I hope we'll have a cross-border, global, almost instant clearing and settlement solution in the next few years.
Great. Thank you very much. It was a very interesting panel, and I hope we've all learned a bit about what the differences are and what the trends for the future are for consumer banking then. Thank you.